blocks away. Trade Daddies on the mic. Let's work. Let's work. Switch lanes, candles and degrees, blue collar mornings, markets after dark, teaching wealth in the shadows, lighting up the charts from the shop to the screens, breaking cycles, no cap, turn patience into profit, shoulder roadmap, education first. Yeah, the mission stay clean, built on discipline, modern Canadian dream. Daddy time, late night grind, charts glow while the world unwinds. Trade Daddies, yeah, we break it down from higher highs to support and bounce. OG in the game, seen bubbles and pain. Hands wrapped tight, both gloves in games. From the ring to defeat, pressure don't shake. Market swings heavy, steady moves get made. W3BC built, yeah, the vision clear. Teach and entertain, make the lesson hit here. Punchlines land like a clean left hook. Markets speak when a trader looks. After bedtime, headphones on, screens glow bright. Risk defined, patience tested every night. No hype trades, only structure and plans. Read the flow, understand supply and demand. Now promises made, just skills passed down, so the next generation builds solid ground. From dads to traders, lessons stay true. Knowledge is power, now pass it through. Who runs the chart? Trade Daddies. Who breaks it down? Trade Daddies. Risk, reward, discipline. Let's get it. Let's get it. Daddy time.
Yo, what's up? Welcome to another episode of Trade Daddies. We back up in this B, and we are vibing. I'm not gonna lie to you. I listened to that intro, and I'm not trying to be like narcissistic, but I listened to that intro on the way to work. It's such a jam,
dude. I don't know. I mean, you're the only one who can see me dancing in the in my studio while I'm jamming. I was bopping the whole time, like boom, 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 boom. Yeah. What's up? Hope you guys are doing well. Welcome to the show. It's Wednesday night. We are the Trade Daddies. We are daddies who trade. That's why we're the Trade Daddies. We ain't your daddy. Ain't your daddy.
I say kids asleep, but mine isn't. It's summertime, so she's still up and about. Actually, yours started school recently,
2 weeks ago.
Right?
We're on our second week of school already.
Oh my god! So tell me how that's been.
Dude, it's been okay. So obviously, you know, when your kid goes to school and she's in pre-K, but she's going full time, dude. She's like going from 8:30 to 3 in the afternoon. So it's a full ass day. Okay. I love my daughter. I love spending time with my daughter. I got to tell you something. It is so nice to have the entire day of just uninterrupted work. So like I'm doing the Silver Bowl radio thing now from 9 a.m. to 1 p.m. So it's that is like, it's a big block, but like even like before in the afternoon, all that stuff, like to be able to have the ability to get everything done here in the house. My wife and I both work from home and all that. So like it sucks that our daughter is in school full time, but it's amazing that we have a lot of time during the day now to get things done.
It's definitely a trade-off. Like so there's some times where I'll have a day off work. I'm like, God, dude, do I take her out of school? But I'm like, you know what? Let her go to school. I got stuff to do. And I just like, you know, you just get a lot of work done when you're in this, when you get in that flow zone.
Locked in, like, when you're in the zone.
Yeah, exactly. Like I love my daughter, same idea. And like I don't want to like have her here and feel like I'm not paying attention to her, because like, you know, our kids see how, you know, we interact with them, which will be how they interact in other relationships, right? So let them be at school. My daughter likes school. She likes, you know, being, you know, at school, doing the stuff and like participating in class. She loves that kind of stuff. So hopefully your daughter's the same way. Hopefully she enjoys participating and being social there.
Yeah, and, she's crushing it. Big time crushing.
Has she met some new friends and
yeah, it's so cool to like Yeah, dude. One of my favorite things, like when we pick her up at the end of the day, is to like ask like what was for lunch, like what'd you do? It was funny the second day. Well, before you go to school, and this was our first, right? She had pre-K, so we didn't do school, we didn't do anything before this, and so we did like the back to school shopping stuff, and we got her like a bunch of pair of like new shoes. We got her like a pair of Nikes, a pair of like boat shoes, like some, they're all pink, right? Pink Nikes, pink boat shoes, pink sandals, all that stuff. Yeah, yeah. The second day she comes home from school with the shoes like destroyed, the laces are like ripped out, they're like just destroyed everywhere. Like, what happened? She's like, oh, we were playing kitty on the playground. I was like, okay, all right, let's try not to ruin everything every day.
Yeah, it's yeah, the shoes, man, they go quick. And you know what? They go quick not only because they're destroying them, they grow so fast. They're gonna grow out of shoes so quickly. Like every year, or even actually, your daughter's even younger. Probably halfway through the year, she's gonna have to get new pairs of shoes because her feet will probably grow.
Yeah, and I think we probably didn't, and I'm sure this is an experience thing. But when you're buying shoes from your kid for school, maybe you size up a little.
Oh yeah,
maybe we didn't. Like we got the ones that fit nice, and I thought to myself afterwards, I was just like, I wonder how long it's gonna be before we have to get some new shoes.
That just reminded me of, you ever watch Russell Peters? Stand-up comedian. So he's like an Indian stand-up comedian, right? Just like Indian comedy. And there was one part where he gets like I've seen that guy. His parents are trying to set him up with like arranged marriages, to set him up with a girl, and she's like a little bit more heavy set, and he's like, I don't know about this one, and he's like, his mom is like, don't worry, Russell, you'll grow into her.
Oh god.
And it's just like the shoes, you'll grow into it.
You'll grow into her. Oh, dude, that's funny. What's been going on in your world, brother?
Dude, it's been so you had made your Silver Bowl game, and I love it, and my daughter loves the game. She was playing it all the time. Nice. And it, honestly, I'm not gonna lie, you inspired me. Like, I'm like, I did not know the capabilities of AI when it comes to gaming. Like, like I've worked with LLMs,
like coding and all that stuff.
Yeah, I've coded like a trading indicator. And I made music and make prompts for music and use the LLM for research and stuff like that. But like, I didn't realize what it could do with a game. So now I'm exploring, and I'm building a game now. So I'm building a game. Yes. I have been just like head down. Like if you guys haven't seen me on X very much, it's because I'm like literally head down, just engulfed in the story right now and building it. So it's gonna be interesting. It's gonna be exciting. Like I've had, it's like build the world you want to see, and I've had some gripes with my time in the Web3 gaming community. So I'm not building necessarily a Web3 game. I think the best, if you want mass adoption, you got to cater to everybody, not just Web3 people, right? I think that's been Web3 gaming's biggest problem, is like you're catering to a niche, and of course you're not going to succeed. You want to cast as a fisherman here, I like to cast a wide net and catch as many as possible. So it's not going to be a native Web3 game. It will have crypto and NFTs in it, but
that's important. I think we're so deep into where we're at in the market. I think finding ways outside of crypto, whether it's things that we're building, just whatever, that's just where it is, man. This industry is not the same that it was a couple of years ago. That's for sure.
No, exactly. It's not the same. It's the average holder base is changing. Institutions are coming in, so you got a different, behavior. I still think retail's here, guys. Like, you're seeing the push in memes, you're seeing the push in NFTs. Like, it's all cyclical. They kind of come in waves. You know what I mean? I don't think NFTs are dead. I just think it's gonna be harder to succeed in that space because it is so saturated. And same in the Bitcoin space.
What it's also going to be, I think that like what we're seeing right now is this shift is absolutely happening. But take a look at what the activity that's happening on Robinhood, right? I think you're getting a lot of traditional. So when you say retail, it maybe is retail in disguise. Maybe, I don't know. We have to look at the makeup of who's doing stuff there. But there was the guy who sold he sold out of an NFT collection, like 44,000 NFTs in like a little bit. Like, that's crazy. That's 4 times bigger than any other normal NFT collection. That if any one of us tried to launch a 10K collection right now, would be a horrible disaster. I don't know how someone's fucking selling 44. And I know that they're cheap, and that's kind of the whole thing, is like you do it for cheap or free or whatever, and then you make some stuff on the sale, the secondary and all that stuff, but still, there's
It's tough.
something's up, something's changing.
I like for example, I like what you're doing with J-Change. You actually have utility. You got some staking. You're going to build more things on top of it. Again, that next bull run is going to be things that actually have, use case, things that have real utility, not just this is our utility token. And it's like, wait, what does it do? Right? It's like, you want to get some value out of holding the token. There's got to be incentives, and the incentives got to be in line for making people want to hold that token, right? Because there's so many out there. That's the thing. There's so many out there.
So many options.
It's very easy to click that sell button and move on to something else, right? So you got to entice people to go on.
Do you know that there is 56.51 million cryptocurrencies out there?
Oh my God,
that's
real?
Wild, dude. When I got into the secret, there was like less than 10,000 back in like 2017. Or
I remember like 13,000, not even that long ago.
Yeah. Like there was nothing compared. Like it's just crazy. There's that many. There's a lot of options. It's a lot of dilution. That is also why altcoin season is going to be tough. I think altcoin season is going to be looking different over the next couple
stand out. Right? How do you get that? There's so many tokens, but this much attention. And how do you get
and this much money too?
Attention.
There's no infinite money glitch right now.
Well, technically, there's an infinite amount of money they can make, but yes, I know what you mean.
Well, for us, not for them, for us.
Yeah. No, absolutely. I totally agree with you on that. This is why I like ways to earn through airdrops and campaigns and stuff like that, and they have ways to do that for people that have opportunity. But again, you're right. Money, something doesn't come from nothing. You have to build that value. That's why I believe that founders that have good money sense, that could maybe have a strategic reserve, that can or find ways for the tokens or the company, I guess you would look at it, to make revenue, and then from that revenue you can use it to spend on marketing and whatever. That way you don't bleed the company dry and then you don't get any traction and you're dead because you spent all the money that was in there. But if you're only spending money that the money made you, then it's still coming back. It's regenerative, right? Because of the beautiful thing called compounding interest.
Yes.
But speaking of coins, we've been talking about this every week, and Bitcoin decision time.
Oof.
Let's work on our week top-down analysis, our weekly time frame, which we always start with. And I'm gonna make the candles really small. I do want to caveat something. I want to show you guys something. Mm-hmm. We did have a cross of the 21 crossing the 200 on the weekly, which is bearish, guys. Bearish. This is what we've been talking about. This is what we've been waiting to see what happened. I told you guys last week that I wanted to see whether we had a bounce or whether it went down. And this weekly candle is not looking great. It closes at Sunday at 8 p.m. So we got to see where this is going to close. If this candle closes red and the next week closes red, I feel like we're going to lose some serious traction on the weekly and come to maybe even to revisit these lows at 57. So that's what we've been talking about. That was a key number. It was the weekly 200-day moving average. So let's go to my other chart, which has like the bigger time frame. Let me remove all my drawings. Okay, so 2022, we had lost the 200-day moving average. It crossed, and we just continue to come down. Now, did we actually lose it and we come back to touch it? Yes, like we did it here, we did it here, we did it here, and we eventually found a bottom. So I would look for this to potentially happen. Not exactly the same, but once we cross it, look in history. All you got to do is look at the chart and look in history. Every time that the 21 crosses the 200 since back into 2018, look what happens. We didn't have it here. We didn't have it here. It happened here. You had a bottom below, somewhere below it. Mm-hmm. It crossed now. So we're probably going to find a bottom somewhere below it. Maybe we have something like this. I remember I said a double bottom, right? Mm-hmm. We come back, make a double bottom, right? Maybe even a double, still a double bottom, but maybe a higher low.
Is that's the Adam and Eve bottom, right?
That could be an Adam and Eve. It doesn't have to happen this way. I'm honestly just guessing it.
Right.
This is Just
What's
forecast.
can you do me a favor? Can you measure the distance from when we dipped down below in the last time? What that
Here?
was last time. The example that you were just saying, that's probably back in like
Oh, here?
2023. No, like 2023.
Oh, okay. You're talking about
So
here.
when we dipped down below the 200 day,
Yeah, I gotcha.
how far down below the 200 day did it go?
So when we initially crossed, we went down another 30%.
Okay, so where does that put us from where we are now?
So 30% from here brings you to 30, about 44K. Remember, 44 to 47. We've talked about this on the show.
I will take it.
We've talked about this on the show. I truly believe somewhere around there is where we're going to be a magnet to. It's going to be a magnet pulling us down. And by the way, shout out to the chat. Luca, what's going on? DC Burr, welcome to the channel. And Michael Navarro, what's going on, my fellow Mike?
Oh, we got the homies in the crowd. Shout out to you guys. GM, make sure. I guess GE. Good evening.
Good evening.
Hello.
Good evening, Mr. Bond. But yeah, so anyways, we're gonna come down. The cross is what I've been waiting for. So I'm still in watch and wait mode. Like I want to lose this 200-day moving average, right? You can even say like a part of me was still thinking that this was like, if we just used candle bodies and we ignore this volatility here, we can say it's like this.
Of rising wedge.
Yeah, kind of
Ish.
It's hard to honestly, it's such a weird, like I was playing around with this the other day trying to make sense of it. Like I think it makes the most sense if you ignore the wicks and just use candle bodies and forget about this. This is a liquidity grab, so I would forget about that.
Yep.
And that makes the most sense to me. That's a bearish rectangle. Like that, like if I'm gonna make sense of it, like that's the bearish rectangle. Do we hit the target of this? Because this 46K, if you put it here,
what's the
43K.
So why is that? Why would that be considered a bear? Like, and just because I don't know, a bearish. You said a bearish rectangle, and how is that a bearish pattern versus just a normal consolidation?
And bearish rectangle. I'll show you. So let me see if I can find a graph. There it is. So let's look at this graphic here. So a bearish and bullish rectangle are basically continuation patterns.
Oh, so it's how it entry. Yeah. Okay.
Exactly. So a bullish rectangle, it's basically just showing consolidation. We have a move to the upside, the price consolidates and then continues through to the upside because we came into it from an uptrend. Bearish rectangle is we came into it from a downtrend, we had some bearish consolidation, and then down the bottom we go. So that's what I mean when I say bullish and bearish rectangle. It's a consolidation pattern and a continuation pattern.
Okay. That makes a ton of sense. And because we came from the top down, bearish continuation. Gotcha.
Exactly. And you can see these kind of like, and they're not always perfect, but you can see these consolidation patterns, whether it's a bearish rectangle or rising wedge. They all do the same thing onto the downside. Just like a bull flag does the same thing on the upside. You come up, you consolidate, you came into it from an uptrend, you're likely to continue to the upside. And all it is consolidation back to the 21. Right? It's up and we come back to the 21, and then you come up and you come back to the 21. It's the same idea. And then on the way down, it's you lose the 21 and you come back to it. You lose the 21 and you come back to it. And that's basically what we're going to do. I feel like either this week or starting next week, we start putting some distance between price and the 21 here before we come back up. So maybe that's a move here and then back to the 21 before we make the next low. So we're getting into the middle of August next week. And then you got September and October. Like after August, you got maybe 2 months, and that might be the cycle bottom somewhere in October. Might even be before, could be in September. We don't know.
Well, I remember we looked last week, right? We look at the history in a bear market, August, September, usually not good months.
No, absolutely not. So like, let me take a look at that. I believe that was a BTC monthly returns. I love this graphic. I use it all the time.
CoinGlass. It's so much good stuff on CoinGlass.
So in bear market specifically, so 2018, August down 9%, September down 5.58%, and October down 3.83%. And we found a bottom in November. That's why we're down 36% in November. 2022, August was down 13%, September down 3.12%. October ended up being in the green, but November was the bottom,
Double digit, yeah.
and that was 16.23% down. So it could be like November could be a bottom again. October could be a bottom again. I'm still leaning towards October. I will tell you, I am just dollar cost averaging now because I believe we're closer to a bottom than we are than anything else. I don't know where the bottom's going to be, so just DCA. There's a good time to DCA, and I'm DCAing just from a time aspect, just based on where I believe we are in the cycle. So August, September, October, and then getting into Q4, and that leads us into one of our news things that we're talking about was Clarity. Clarity delayed again. I feel like this is the carrot and stick. We're just getting toyed with here with the carrot being Clarity, and everybody's just like got all their hopes on Clarity. And I think it's gonna take longer than people think. Like,
which is the weird of all times. Saturday, the 15th, is when the CFTC and the SEC are getting together. I think they're going to take the matters into their own hands. It sounds like they were going to be trying to bring Clarity to fruition and just say, to Congress and Senate, like, take a hike. Go have your little vacation, nerds.
That's who should be doing it. The CFTC for commodities and SEC for securities. They're the ones that should be moderating this stuff. What the hell is the government has nothing to do with it. The senators and all that, they still know this crap.
because they answer to the banking cartel. That's why they got to deal with it.
Well, yes, of course. But what I mean is, like, when it comes to like the teams with experience in financial markets, you probably want those people handling it than freaking Nancy Pelosi.
We say that, but the SEC is still looking at rules from like tulips and 100 years ago. So
you're absolutely right. I'm hoping that Trump has got the right team behind him to get it done. I think he does. I think it'll get done. Again, it's going to get done in a favorable way for the U.S. And for governments and institutions. It's
not for retail. Not for us.
It's not going to be. It never has been. It never will be. Favorable for you. But the good thing about being in crypto is you can have self-custody, you can move your wealth wherever you want, and you can vote with your feet. So if the US doesn't work for you, leave.
Yeah, one.
Right? Like, there are countries that offer zero capital gains in crypto, like Dubai, like Portugal,
right?
If you hold for over a year, like, there are options out there. So maybe you don't have to leave the US, but maybe you work on getting another passport. There are options for you to be successful. And to be honest, this US system that exists, and Canada is very much similar, has a great tax available strategies for you to be able to mitigate tax obligations. There are ways to mitigate it. It's just about the knowledge and learning how to do it. So I still think North America is a great place to live in comparison to the rest of the world. Yeah, of course we pay a lot of taxes, but there are ways to mitigate that. If you're savvy, it gets a lot more complicated, and you probably got to have a team of tax people behind you, but there are options for you. And you can be successful. I don't use it as an excuse. Don't be like my parents and use taxes and paying the government an excuse not to do anything. They love to complain.
That's funny.
All right, let's move down to the 3-day chart, and we'll go from there. Let me remove my drawings here. The 3-day chart, you see more of that. Now, this also could be a ascending triangle, just to keep that in mind, but I'm less likely to say ascending triangle just because the stochastic is really high up here, and eventually we're going to have to come back and reset, and that makes sense for me that we're going to come down
with that down to at least into the 50s again, like not the 40, maybe not the 40s this push, but that's ultimately what we're looking at if it does take another big pop down.
Yeah, like if you want to continue to say that this is a bearish rectangle, we would just basically use this line here. Again, we will ignore the liquidity grab here. I can even incorporate it into it. Like, who cares? Like, we rejected here, came back, retested again, rejected again. If we lose this 21-day moving average, we're going to come back down to the bottom of the channel, which would be 59K. And if we continue out of this 3-day to the downside, you're looking at a move again down to 40K potentially. Does it get all the way down there? I don't know. but I'm looking
Yes,
for a
38.
stochastic RSI reset. We're at the neutral line, so you can see sometimes when we get to the neutral line and the stochastic RSI is up at the top, we come for a reset. The RSI comes down, and same with and we get the reset right there. Just that's what this move was here. You get the consolidation, come up and then down, but like all in all, like this, even you can even incorporate this entire thing here. This whole move is consolidation. This is actually a head and shoulders. Actually, now that I'm looking at it,
Oh
this
wow,
is
yeah, you can see
yeah,
it.
shoulder, shoulder, head, shoulder, shoulder. Right. So that's I'm leaning
Is
more bearish than bullish, guys.
Yeah, when you see the double shoulder pad, is there anything that suggests that that's a different, maybe a different outcome in the
It
double
just
shoulder
it
versus
just
single?
happens. There's a lot of manipulation in the market, right? Like something's like the bears and the bulls are fighting. The market doesn't know where it wants to go. It's just really consolidation. There's gonna be a time where it just comes down. And I'm leaning more down because where the indicators are, there is room to move down.
Yeah.
Right? And you don't stay up here forever. Like as you can see, it always oscillates. Stochastic RSI, it's an oscillator, it's up and down all the time. So what I'm waiting for is price to lose this 21-day moving average before I get super bearish. I wouldn't necessarily trade this like this. What I would trade is if this neckline, if price loses the neckline. So if price loses the neckline, for example, we come back down here, we lose it, we come back to try to retest it. I would probably get in here and put my stop loss above here and then try to write it down.
Try to get that rip.
Like that would be the safest entry for a short to the downside off this potential head and shoulders. If we are going to invalidate the head and shoulders, we need to see price get above here, right? So you need to get to 66, 67K, which will also coincide with my I'll show you guys another I think it's on my weekly. Oh, I think did I remove? Oh no, it's the other chart. So if you look at my other chart here, I have these dashed lines. I was just mapping out support and resistance, and 67.2 is kind of where we got stopped out on the wicks, and then our bottoms here. And I went to the bodies here. I can even just go to here, but I'm gonna keep it here because there's more touch points. 1, 2, 3 touch points here, which is 59.2. So unless we get above 67, we're still in this consolidation pattern. And if the next level would be coming down to 59 and losing 59 and revisiting those lows at 57. So that's that's kind of the consolidation I've been waiting for. Like just
What do you
chilling.
think? If not that I'm not looking, but just just for general, because I'm sure people have questions. Like, would you front run this next dip or absolutely not?
I would front run that bearish rectangle that not front run. I would wait for the bearish rectangle to confirm. I want to at the very least get to the bottom of the channel.
Mm-hmm.
That way I can short it, put my stop loss back in the channel, and then mitigate my losses if we go back into the pattern. But to be honest, like I'm not trading as much these days because I'm only trading when it's like obvious, like really, really good. And we're getting so close to that point.
Plus you're developing a game now.
Yeah, exactly. So like I'm still on the same idea, is that this is an inverted double bottom. So if you invert the chart, it looks like a double bottom that could pump up, right? You have that Adam and Eve double bottom here on the 3-day chart, which looks like a pump to the upside, which obviously when you turn it back the right way, it leads to more downside. So I'm waiting for this to lose the 21 and try to start making its way to the bottom of this channel. We lose this support, then things are going to get nasty. And that might be it. That might be the last leg.
It becomes an opportunity.
Absolutely. Like again, it always reminds me of that meme in crypto. It's like everyone's like standing up, with the nooses around their neck, and the guy's looking at the first time. It's like, I love that one, and it sums up crypto exactly, because the longer you're here, you've seen all this before. You've seen and I'll be honest with you, this does not feel anything like 2021 when FTX collapsed. This doesn't feel like anything like when what do you call it? when in 2018 when we hit a bottom and stuff like that, or COVID. It doesn't feel as dire or really bad. It's just a natural correction of the market.
Mhm.
The stock market goes up and comes down too. Like this is how
Normal.
investors make money, right? Investors make money by buying when there's blood on the streets. It's the true and tested strategy that's
The
been
only.
successful for over time, and it's just the natural way of the market. So, but even though crypto can make you money really fast and Bitcoin can too, but you still teaches you patience because you gotta wait in the seasons of crypto, the 4-year cycle, and we're not quite there, but we're getting there. And I'm getting excited because we're getting really close to a cycle bottom. We don't know exactly where it's going to go. It could dip into 30s. We have no idea, right? But the closer you get to the bottom, the more upside potential you have when we get back, even just a previous all-time high. Forget about like at this point, if we go back to 126K, you're doubling your money, right? Like
Yeah.
I'm okay with 200%. Like, hello, that's pretty good.
Take that.
Absolutely, anybody would take 200%, right?
Yeah.
I would love 1,000x, but like, hey, I'll
Oh,
take
man,
200%.
come on, give me a 100x at least to start.
All right, let's take a look at the 4-hour and see what's going on here. 4-hour, it's kind of the same idea. We lost that 200-day moving average. We came back up to it. We lost it. We tried to go above it. It looked really nice, and then we got rejected by the 200-day moving average, and back down we go. And now we touched the 21 again, and then rejected by it again. So it looks like we're just making a pattern like this, and we're making. This is a higher low, so let's see if we make a higher high, but we'd have to get above like 64.3 to make a higher high in the 4-hour. So we'll have to see what the 4-hour is going to do. There's still room to go down here on the indicators, and the MACD is not quite flipped in the green yet. So we'll have to see what's going on here. But again, when you're below the 200-day moving average, shorts are more likely to pay up.
Mhm.
And when you're above the 200-day moving average, when price starts looking like this, where you're going up, you come back to 21 above the 200, which is the yellow line, longs are more likely to pay off, right? So we'll have to wait and see there for the 4-hour. 1-hour, same idea, below the 200-day moving average. Most time frames are going to be like this until maybe we get to the 15 or 5-minute, or the 5-minute or 1-minute.
Mhm.
1-hour, again, below, still leading bearish in my opinion. This could be a slight bear flag here, kind of like this, bearish rectangle, whatever you want to call it.
I mean, very clear. Like after you explaining the whole bearish rectangle thing, I mean, even the two previous patterns before that, that's what they did, right?
Absolutely. Bitcoin does. This is why I love trading Bitcoin, because Bitcoin does the same thing over and over and over all the time. It just makes these patterns, and they're very easy to see. Like you can see the pattern and the trend, whereas altcoins can get a little wonky.
Mhm.
And there's more liquidity grabs. Again, smaller market caps, easier to move the price. Bigger market cap, harder to move the price. So what I'm seeing here is even a potential head and shoulders here. Like this could be the shoulder, this could be the head, and this could be the other shoulder, slanted head and shoulders, right? So that is very possible here for the move to the downside. And look, 62.3 is kind of the next target, I would say, on the 1-hour. Again, could be wrong, but that's where I'm at until proven otherwise. We got to get above 63.7 and then beat this high here to start building something good. But you'll see if we start to pump up, you'll see it build in the 1-minute, 5-minute, 15-minute, right? So if we go back to the 15-minute, I'll remove my drawing so it's easier to see. If you're looking at the 15-minute, we want the 15-minute to get above the 200-day moving average. We are still below it. You kind of see that head and shoulder, head, shoulder, even a third shoulder. Not great pattern, to be honest. And again, still that bearish rectangle still yet again here, just more candles in it. So I need to see this and validate this, get above this and start making its way to the 200 for me to start to get the bullish. 5-minute rejected by 200, again rejected by 200 again. We lost the 21-day moving average, coming back to touch it. I would anticipate either some more downside here, but again, moving averages are getting tighter. As you can see, the moving averages in the 5-minute are getting tighter. So there's going to be a move at some point. So stochastic is low and the RSI was low, curving up. So we could have another push to the 200 day moving average on the 5 minute, and we can see if we get the cross of the 21 and the 200. That's what you would be looking for if you're bullish.
If you're really quick back on the, I guess it doesn't matter what time you start, because that's really the question. Would you, at what time frame do you invalidate, or it's just you don't really even try to pick like a double top? Because like on a 5 minute, that looks like a double top there, right?
Yeah, yeah, exactly. Double top M pattern, right? We can say it's an M.
But like are there any time frames where you're just like, no, this doesn't matter, this is too short of a time frame?
They all matter, but the velocity of which they play out will be less likely or less strong on the smaller time frame. The 1 minute I would say is like I wouldn't trust it. I would start what I've developed as I've traded more and more and gotten more experience. I've started to trade at bigger time frames and use the smaller time frames for that momentum wave. It starts on the 1 minute, moves to the 5 minute. You can take the trade on the 5 minute because it's safer than the 1 minute, or you can wait for the 15 minute and the 1 hour, right? And take that, depending on how you want to go about it. But if the weekly is bullish, for example, and we start building momentum on the 1 minute, 5 minute, and the 15 minute looks nice, maybe I'll trade on the 5 minute, anticipating that the 15 minutes going to flip bullish, and then which will lead to the 1 hour leading bullish, right? And I can catch that wave. Or if the market's choppy and we don't know what direction we're going, maybe I'll wait for the 5 minute to get bullish and consolidate on the 5 minute, which will lead to the 15 minute getting bullish, and then get in on the 15 minute to trade the 1 hour. So
right, okay.
I always use the analogy. Think of like a surfer on a surfboard, the wave starting, guys paddling, trying to get the momentum of the wave, and you just ride it. You ride it until the wave dies off, right? And that's what trading really is. You find the momentum, you catch a piece of it. You don't have to catch the whole move. You just catch a piece of it, take your profits, at least for scalping, and then you get out and
get ready for the next one.
Absolutely. And I'm more moving towards a trading strategy that's like more macro trading, like trading overall trends on bigger time frames. Like that's why I like the weekly, and I want to try when we get to the bottom and like price like 21 crosses to 200 to the upside after we've clearly had a bottom. Like I'm gonna long the shit out of this
with everything you got.
Oh my goodness. I'm going to long it. Even if I get stopped out, I'm going to do it again because, it's one of them's going to stick. And that's a great long to have throughout the whole bull run.
So let's look back at a previous bull run. At the last time it did that, where it crossed and then went to the upside, like what kind of a gain was that?
Let's go to my other chart here. All right. So when we crossed,
wouldn't be a trading show if there wasn't a oops.
Hey. Right, we should put that on a t-shirt, just a yellow line. Oops.
A little slight curve to it.
Okay, so when we crossed here, say you got in at the cross right here, we'll say we saw first that it crossed exactly. Oh god, there we go. Right here, that would have been a move of 266%.
Do you imagine
multiplied by say 50x leverage or whatever leverage you're using
with a nice position there? Absolutely, dude. Yeah, I mean that's at least a 50x if you're trying to catch that Jenny run, dude. You probably you don't really get a whole lot of wiggle room if you're higher than 50x.
So let's take a look. Limit price. So say we get in at 47k is the bottom. Okay. See, I put a position 10,000, right? 10,000, 50x leverage cross. My margin is only $100, right? So there's only $100 like in the trade for margin. Take profit would be say just previous all-time high 126,000, and stop loss would be I don't know. Forget about the stop loss.
Yeah, no, we're riding. We're raw dogging this trade.
So that would be a $16,808 profit.
You're gonna need to put a little bit more than $100 in there. You need to probably put $5,000 on that.
Oh, of course, but I'm just saying, like,
What
look
does
it
that
up.
do? Moon math. Moon math has what is five? What is the $5,000 position? Oh, can you do that or?
So well, I don't know. I only have 98,000.
Okay.
So I'll put half of my. I'll just put 45,000 would be 50% of my portfolio. 45%. That would be the margin required would be $450,
Okay.
right? And that is a 8,400% return, which is $75,638,
Dude, you just need one. You just need one.
right? And that is just it going to its previous all-time high.
What's your number? What is your bull case?
Okay, I'll give you my conservative case and my bull case. Conservatively, I'd say 175, 180. So 175 would give you $122,000. Bull case 220, around the 220s. So 220 would give you 165. Yeah, $165,380. $450 margin. Now my trading portfolio is only 1970 USD. So like that's 50% of my portfolio. So that's it's honestly like that's the best risk versus reward. You're not going to get better than that, right?
No. And I mean, again, and because you're setting it up and you understand, how the intricacies of the 21 and the 200-day move, we've seen this thing happen in the past. We are coming close to the end of the bear cycle. At some point, these things will reverse because markets are cyclical. What goes down goes back up. That's how the whole system works. And dude, I will be eyeing that thing like a hawk too.
This is why I love charting and technical analysis, because you can see this shit. You can see this stuff, and you when you get the knowledge and you understand how to trade, you don't have to be the best trader, but just understand how the relationship of the moving averages, the relationship with the RSI, the stochastic. You don't have to be the best trader. Just play with the charts, look at the historical data, go to any stock, you see the same thing. I'm going to pick one randomly. I'm going to pick a Canadian random stock that's here. Let's go with Sun Life Financial. It looks the same way. We come up, we come back to 21. We come up, we come back to 21. We bounce off the 200-day moving average, and we're good. When we are in downtrends, we lose the 200-day moving average. We consolidate, we come back down, make a double bottom, and then we're up again. We cross on the weekly, and we're good. Right. And then, we consistently now stocks aren't going to be as volatile as crypto. Like this is traditional markets. So we don't really lose the 21-day moving average. Like this is 2009. This is the financial crisis. That's why we lost it. Mm-hmm. But ever since then, it's been up and to the right. We do come and revisit the 200 and maybe we lose it a little bit, but nowhere near like we do here. So this is what you'd be looking for. So what I'm looking for in the traditional stock, I'm just looking for a nice consolidation back. Like when you come back to the 200-day moving average on the weekly on this particular stock, that's a great buy, like a great buy. Because the last time it happened was 2024, right? It doesn't happen.
Been waiting for this setup for a while.
Yeah, Enbridge, which is Enbridge is like natural gas for residentials.
Okay,
right? They pay dividend and stuff like that. Same idea. When you come back to the 200-day moving average or you lose it, that's great buys. Just like crypto, price goes below it. We have the 21 cross the 200, and you start an uptrend.
Would you short this Enbridge one because now you've seen it drop below the 21-day, and it's had a very long time away from the 200-day, so maybe it's time to come back down to earth. Like, is that something that you would think about doing ever, or no? Because it's really kind of anyone's guess. It could go either way.
To be honest, just because I know the stock, I think we're just doing something like this. We're just coming back to this moving average here.
Oh, okay.
Just because September 1st is when they pay out dividends. So it makes sense that the stock is coming down because they're going to pay the shareholders dividends. And then I think it'll start to climb back up.
Oh, okay. All right.
Yeah. Enbridge is one of those companies where like where I live, they're the only natural gas supplier. So they don't have a competition. So like that makes sense of why the chart mostly goes up and to the right. I do think this will like trend downwards at some point, just like we've done in the past when we had big runs and we come back down. If it now, maybe it is, maybe it's starting to come down and that we're getting close to we'll find a bottom at some point and then the next uptrend starts, right? I don't know, but you know, if we come back to the 200-day moving average, I'm fucking buying more. Like, absolutely. But like, that's what it is for when it comes to trading technical analysis. Yeah, you're never going to predict the future perfectly, but my goodness, can you like really up your game and just a little bit of understanding how this works? And that's what we're trying to do here with the on Trade Daddies. I try to show you, what I know and how I look at things, and I show you how it works on other charts that have nothing to do with crypto, and it's the same thing. It's just all charting is the physical mapping of human emotions. Somebody thinks it's oversold and they sell, or overvalued and they sell. Some believe it's undervalued and they buy, and you have this back and forth between buyers and the sellers, and that's where price goes. And, all right, let's move into some news.
Let's do it.
I think we know where we're going with crypto. Let's move into some news and then get out of here. All right, let's get the music pumping here. Let's set the vibe, and we're not going to do bongos this time. So it's off, man. It's a full moon. There was some crazy celestial event that was going on that Mick mentioned. There's like a multitude of celestial events. I knew it, man. I knew it. There's definitely something going on. I was not wrong. And there's like a celestial event tonight. Isn't there some like meteor shower and an eclipse today or tomorrow?
There is some kind of crazy. Let's see.
Yeah, I heard there's some like meteor shower happening like tomorrow morning.
The Perseid meteor shower reaches peak when and where to glimpse.
Yeah, and I believe there's like a partial solar eclipse at the same time.
Wow. Perseids. It takes 130 years to complete a single orbit around the sun for this Perseid, I guess.
Wow, that's crazy.
A burning rock. This is interesting.
Okay, right. What do I don't have a whole lot of news today, just the important ones. So Fidelity files to let its Ethereum ETF stake and pay investors.
Mm-hmm.
Hey man, that's what we want. We want to see them being able to take advantage of the yield, because that's the incentive. The incentive is to earn the yield, and it's really good for Ethereum because it makes people hold. Right? Investors want a yield, and you got to look at, like, if I'm an investor, I'm a traditional investor, and I look at my traditional vessels for earning money. If I'm a billionaire, I'm most likely going to be in something safe and secure, so I'll probably be in treasury bonds, be in the bond market, but they don't pay very much, 3% or whatever. So then I look at Ethereum. I can get an Ethereum ETF that pays me 3%, but also in an asset that has like a really good upside, right? So you can get the ETF at the lows, you get your 3% or 4%, whatever it is, and you're getting paid in Ethereum, which also has room to the upside.
Right.
So because if you're in bonds, you're just getting paid in cash. The cash doesn't go up or down, right? But now you're getting an asset that grows in value too. So double whammy.
You see, I don't know what other stories you got, but as far as ETFs goes, you see they pulled the plug on, was it Hedera, Cardano, and Uniswap or Polkadot?
No, if you have that, pull it up, and then I'll share your screen. I'll move on to the next one while you find it.
All right, cool.
All right, so ShakePay, it's release week for ShakePay. We met with the people at ShakePay at the Futures Conference. Really, really awesome people. So I definitely want to showcase what they're doing. They had their launch week today. They're kicking it off with for the next 30 days. So if you're Canadian, ShakePay is a great on and off ramp if you want to buy crypto, sell crypto. But now you can deposit your paychecks in there. You can earn some money off there. You can earn in Bitcoin, and you can spend and earn cash back in Bitcoin. So they launched for the next 30 days, swap eligible ERC20 tokens into Bitcoin at a 0.21% fee instead of the usual 1.5%. So if you got some dust that you want to convert over to Bitcoin, probably a good idea to get that done if you're on ShakePay. And if you're not using ShakePay, definitely look into it. Hit up my profile in the link tree and you'll see my referral code for ShakePay. Full details. Let's see here. So then what did they have? The next launch day number 2, introducing ShakePay Savings, a new place to set aside cash in Bitcoin and a dedicated account keep savings separate from card purchases and exchanges. So basically what you're going to be able to do is lock in cash or Bitcoin and earn a yield, like a savings account. If you're a blue customer, now blue customers, like there's different statuses depending on how much volume and how much you deposit. So to get the tier of blue, you have to, put a certain amount of money in there, but they can earn up to 5% on their first 100,000 cash held in savings. And it's also covered by CDIC insurance up to 100K.
Oh, wow.
So you are protected like traditional investments. And this stuff coming in, like CDIC insurance coming into crypto assets, pretty big.
I would assume the CDIC is our FDIC. It's just the Canadian
Absolutely
version. Okay.
Exactly. The federal and Canadian. that's literally the only difference. So that's amazing. Like this is what people, like traditional people, need to see to feel safe to invest in the crypto. This is mass adoption, people.
That's one of the things, I wanted to talk about this because it's like the way that, if you're crypto native, you've been here for a while, like our interpretation, or I think our expectation of like how this whole mass adoption thing looks versus what we thought it's going to look like, totally different. I think there's a lot of centralization. There's a lot of things like this that are going to absolutely be critical in order to usher in a true mass adoption. Again, like what is mass adoption? Is it like, oh, once we hit 350 million wallets, we did it? No, it's when you're using tech without really having to be told or like put in your face, like this is blockchain.
Yeah, when you tap your credit card at the store to go buy groceries, you think to yourself, hey, I wonder how the RFID or the NFC chip works. No, they don't care. They just want to go home and eat whatever they bought, right? Like, so like that's exactly what you need. And I think we are still so early in this ecosystem, guys. Like we're still upgrading. We're laying the pipes and the foundation of what will be the new financial system moving forward. But like there's a lot to be built still, a lot. So if you're a builder, get building, right?
You're building, I'm building. We know a lot of people building. This is the time.
Yeah. And if you're a user, start exploring, right? Start exploring, getting educated, and just play around in crypto and see how it works, right? Day 3 of launch week is here, and they also are launching the physical card. They told us about this actually at Futures when we went to that private event. So they gave us a little bit of the early alpha. We met with the head of finance at ShakePay, which an awesome gentleman. If you guys want to see my full interview on my X, it's there with him, Hasim. So make sure you guys check that out if you want. They're opening physical card openers to shakers beyond the waitlist today. So they had a waitlist. Now they're opening it up to everybody. So if you want to spend crypto, it's a Visa card. So anywhere that Visa is accepted, you'll be able to use it, and you get 1.5% cash back in Bitcoin.
I was gonna say, do you get it in crypto? Obviously,
in Bitcoin, paid weekly on the card. So, and you got cash withdrawals at ATMs. Like it's gonna be great. So if you want to be able to spend crypto, that's the way to go. ShakePay card is there for you.
How long do you think until there'll be crypto activity on the X card? It's like right now, it's literally just fiat. You only get fiat. It's not like Cash App where you can have stable coin or Bitcoin.
Do you have to be monetized to get that card?
No, I'm not monetized on X. Literally, I had gotten a thing saying, "Hey, did you want to sign up for it?" I did. Got the $25, and bada boom, bada bing.
Oh, so okay. I thought maybe it was a way that when they pay you for your,
it will.
Okay,
it is
okay.
X Money. I believe X Money will be part of your monetization.
It makes sense. Like if Elon Musk was one of the people that helped found PayPal, right? Like it's totally natural.
So like Ashley Decan, I saw her post something the other day where she's using her card. It's like airlines, airports, all that stuff. So I'm sure the money that she gets in from being monetized goes into that account because you get a routing number. It's a bank, Sutton Bank maybe. Cross River Bank is the issuer.
Okay.
So you get a routing number and an account number.
Perfect.
Just as a bank.
I love it. Is it it's not a Visa card. It's just X. It's like a separate thing, right?
It's a Visa.
It is a Visa. Okay, there we go.
And look, you got it's got my name, Justin Costardo, and it's got my @ on it. So it says @JChains.
Oh, that's sick.
Yeah.
It's almost like a business card too, right?
And it's metal. And it's
I love the metal cards. I still have my crypto.com one. I haven't used it in forever, but I love the metal cards. That's the future. I feel like everyone's doing payments right now. Like Mikkel. So if you guys see on Tuesdays, I do the adoption pod with Mikkel, and she's also developing Artist Cash, which is going to be, you know, pay your bills with crypto. No more middlemen.
Ooh.
Just pay directly to the vendor with crypto, which does not really exist in that current form right now. So you guys want to check out I'd admit that, because they're building something special there. It's going to be for US people first.
Okay.
So if you're in the US, if you're in the US, you're in crypto, you're getting paid in crypto, probably something good for you to be able to pay your mortgage, your property taxes, whatever, in crypto. So ShakePay, really, really good. And I think that was it for my news. Did you have that the other one pulled up?
Yes. Let me share my screen.
All right.
You go. Grayscale quietly dropping the Cardano, the Polkadot, and the Hedera ETF. Their asset manager said no longer intends to proceed with the offerings. Nothing had been started. They didn't issue any securities. None of that kind of stuff. Let's see what else is in here. Oh, what was I think the reason was market conditions.
Can somebody check in on, good old Hosky? Is he doing all right?
There's no way. There's just no way he is. Like his last little episode where he blew up on
Is he gonna have a crash out like fucking BitBoy?
I think it's happening. To be honest with you.
Maybe that's when we find a bottom. It'll be the Cardano crash out.
I mean, it's pretty easy to explain. Like, yeah, maybe this isn't the right time to or this probably is the right time to be launching investment products for these people, especially if you want to win. If the house doesn't want to pay out the money, you're like, wait a second, no, we don't want to do anything yet, because look, ADA's down 70%, DOT's down 80%, HBAR down 70%.
You know, it's funny. When I was doing the game development, I was talking to Grok, and I was trying to figure out, like, if I was to launch, what network. Like that's kind of why I'm wearing my Avalanche shirt, right? Because shout out to my AVAX gaming people. I signed up for the Solana Summit in Toronto to see if I might go there. So like I haven't decided what network. It's September 23rd and 24th.
Oh, nice. I'll be August 29th, Solana Summer House in downtown LA. I'll be there. Ooh. That'll be exciting.
Oh, that's gonna be sick. Enjoy, man. Yeah, because I don't know what network to go on. Like it was between AVAX and Solana, because those were the gaming chains, right?
Most active as well.
But I know a lot of AVAX people, but I don't know a lot of Solana people. So I'd love to network with people on that side. So if you're a Solana user and gaming people, hook me up.
What I would suggest, and I got a chance to meet those guys at Futurist, and they were pretty cool. There's the super team. Super team started. And so there's the Super Team Canada, and I interviewed one. I actually got to put a few more interviews out this week, and I will do the Super Team guy one that I did. He was also representing another company, but that is something that I want to get on a part of. I got to talk to Amy Street. I think she's like running the show here in the U.S. down in Miami. I think is where Super Team is. But yeah, there's a Super Team Canada. Definitely check it out.
Yeah, Super Team is in Toronto. I saw them. I made sure as soon as I saw them, like, I gotta follow these guys. Like, definitely. So, yeah. So we're gonna connect with the Solana ecosystem and see what's going on there. But yeah, man, it's so. Anyways, when I was developing the game, I was asking Grok what network to use, and it said like, "Well, for fees and cheaper transactions, use Polygon." I laugh. I'm like, I'm not using Polygon. Come on, no way in hell.
Polygon.
Yeah, exactly. No, that's a great way to set up for failure. So no, not using Polygon. It's probably going to be AVAX or Solana, or whatever. Like maybe just
do it multi-chain, man.
I don't know how you do multi-chain. I was literally thinking about that, but how do you do multi-chain with NFTs?
You just have to have a bridge, probably. But what's the point?
Yeah, I don't like bridges. I'm a risk adverse person.
It is an unnecessary risk to have like a full blown bridge. And do you remember, like, I don't know if you in years past had taken advantage of a bridge, but dude, it is like horrifying when your coins don't show up for like 2 or 3 days. You're like, what happened? Where is this stuff?
Yeah, I've had that. No, thank you. Never again.
Nope.
Yeah, exactly. Honestly, crypto's become so much better, than the early days when we got in. Scary moments, man. Like I sent some Bitcoin over from crypto.com to the other one, and like, where the fuck is it? and my heart dropped. It was like middle of the night, my wife's sleeping. I'm like, I just lost all our money.
Oh,
Like
God.
fucking sweating, like what the fuck do I do? And then like a little bit later it said transaction failed. Oh, thank God, money back in my wallet.
I've never wanted a failed transaction so much in my life.
Oh my goodness, let me tell you, I almost got divorced. That was it. That would have been it. So but we averted disaster. I am not single, thank goodness, because I would not want to be dating in this world these days.
No, dude.
God.
I popped into a Twitter space the other day, and they're all they seem like older people who are in crypto, and they were talking about the dating scene. Dog, I exited out of that space so fast. I'm like, I don't even want to hear about your stories.
No, thank you.
Nope.
I will be a recluse by myself. Actually, no. Just have a fucking AI girlfriend. That's it. It'll just be a companion. And then when we can finally get those humanoid robots, we'll just upload her onto there. She never talks back. I can turn her off.
Just program the LLM.
Full control.
Don't talk to me.
I'm gonna program my identity to be my lord. She has to call me my lord every time. Like,
Yes, my lord.
Yes, my lord.
just make me sandwich. Yes, my lord.
Yeah. And you need an English accent too, for sure.
Oh, absolutely.
Oh, dude, that's wild. That's funny. I'm looking forward to this. Like, I know Tesla, like the Tesla robot. I think we've talked about this before, dude. But like, I really, really, really wanted the Model X from Tesla.
They stopped making them.
For the robot.
Yes.
For the robot.
Oh.
And ultimately, I think I'd rather have a robot than a Model X. So,
Hey, you know what? Model X, get a used one. It'll be a little bit cheaper, and then now you can have the robot to drive it for you.
yeah,
The chauffeur, robot chauffeur.
there you go. At the end of the day, I'm fine. You have a 3, right?
I have a Model 3 yet.
Yeah, yours is legit. Your car is perfect.
I love it. I love it. I would choose to go to a Model Y or an X, something bigger, but it just doesn't fit in my garage, unfortunately. But if I had preference, it would be like a bigger truck, like an SUV.
Would you do a Cybertruck?
No, I sat in one. I went to the dealer just to like see one. It's too big. It's like a boat.
It's crazy with like the dashboard, like on the inside of the car. It's like
You can play a
5
soccer
feet-
game
5
on the
feet-
dash.
Yeah, it's like 5 feet deep.
So when I was a mechanic at Chevy, one of the old Chevy Fleetwood, not Fleetwood, there's a van, and it had one of those like cone style like windshields, and the dash was the same way, like super long. I'm like, can you imagine all the dust that's collected? You gotta like reach your entire arm over there to clean it. No thanks.
Especially if it's a work truck, it's probably cigarette butts and chip packages and
Yeah, a Cybertruck honestly looks exactly like those garbage cans you see in offices with the swinging fucking door, the stainless steel. Like, it's exactly what it looks like. That's exactly what it looks like. Not my kind of thing. It's cool and unique, but not for me. I like the sporty look. That's why I like the Model 3 with the new body style. I like the sporty look, the aggressive headlights. The new Model Y, they redid the look as well, and they made the back look a lot. The lights look really cool in the back. Yeah, let me see if I can bring it up. That's actually really cool. 2026 Model Y. Yeah, let me share my screen here. So if you look, they changed the.
okay. I have seen a couple of those, and I was wondering about that. Okay. Yep.
So the front lights are like a lot more aggressive. They made it look a lot more sporty, and it is different now because the Model Y was just a bigger Model 3. Now the Model Y looks different than the Model 3. Mind you, the inside's exactly the same as the model, like my car, the Model 3, but the outside looks a lot better. So yeah, I would definitely get one of these. These look, I freaking love the front, like these headlights in the front.
Very, very sleek.
But yes, sir. I think what do we got here?
Is that it? Huh?
Jaybird, what's up? I just saw the chat there, so I just want to say what's up to Jaybird. We are probably gonna head out of here. We beat this with a dead horse. We know we're going for crypto, guys. You'll know by next week, in my opinion. Or do we just consolidate more and just continue to go sideways along this 200-day moving average? But on the weekly, we did cross to the downside, and we already have a red candle on the weekly. This closes Sunday at 8 p.m. So if you're looking for trades, I would be watching that weekly candle close. If this closes red, I will be looking for another red candle for the week next week. So that leads us into the 17th, the 21st next week. So the end of August may not be great. So keep your eyes out week by week. We'll be here next week, Wednesday, 9 p.m. on Trade Daddies. As usual, make sure you guys smash the like button, all the cool stuff. Send it to a friend. Tell everybody about the space, because we are going to be the ones that call the bottom, and we're going to be the ones that get you that trade to the upside.
Ooh, that generational long, dude. We're all going to hit those Jenny longs, and we're going to make it. We're going to make it. Wag me, baby.
Absolutely. All right, guys.
Actually, we're cutting out the wag me. Not everybody is going to make it, and we can't encourage that. There's no participation trophies. Several of us will win. Mike, you're going to win. I'm going to win. People that watch Trade Daddies is going to win. Let's freaking go.
Let's go. Okay, guys. Thank you so much, and we'll see you on the next episode. Peace.
Peace.
Yeah. Another session in the books. Trade Daddies. Let's close it out right. Yeah. From the charts to the couch, we appreciate your time. Every view, every share, that support is a sign. Late night learners building wealth slow. Plant seeds today, watch the legacy grow. We don't flex hype, we invest in the grind. Teach discipline so you level your mind. If the game gave value and the message hit deep, run it back, tap like, let the algorithm speak. Trade Daddies. Yeah, we here every week, dropping gems, keeping structure unique. If you vibe with the movement, help it expand. Like, share, subscribe, build the brand. Trade Daddies. Yeah, we teach no cap, real dads, real trades, real talk on the map. Yeah. No promises quick, just knowledge and reps. Risk managed tight, calculated steps. From beginners to vets, everybody can learn. Market cycle spin, patience earns. So salute to the viewers, community strong. Independent thinkers, moving along. Hit subscribe if you rock with the show. Turn alerts on, don't miss the flow. Don't miss the flow. Who keeps it real? Trade Daddies. Who builds the skill? Trade Daddies. Like it up, share it wide, share it wide. Subscribe and ride. Daddy time, knowledge climb. See you next week, same grind. Trade Daddies, after dark. Stay disciplined, play it smart. Trade Daddies.